Hi everyone, and welcome back to another Brooks Trading Course weekend market update. My name's Tim Fairweather. I'm a professional price action trader, and in this video, I'm going to cover the DAX 40 Futures Index. So let's go and take a look. So as usual, we're going to start with a time frame one higher than the ones we're going to look at. Today, we're going to look at monthly, weekly, and daily. And at the end of the video, as a little bit of a treat, I'm going to reference some of my other prior drills and show you how you can use all these price action drills on any time frame. One of the best reasons for trading price action as opposed to other forms of trading is that price action relationships stay the same across all instruments and all time frames. And it gives you tremendous flexibility to find a particular instrument, time frame, and setup that suits your personality. So let's kick off by looking at the monthly chart. So someone asked me last week, how come I'm looking at the German 30 when we're trading the DAX 40? This is the cash index, and the advantage of looking at the cash index, there are fewer gaps, which makes reading the price action much easier, and I highly recommend you do both. So on the monthly chart, you can see we broke to a new high, really strong breakout, lots of open gaps and open body gaps, and now we've got 1, 2, 3 consecutive bull bars, two of them closing on their high. So we've got a big distance to the moving average, but now that we've got a new high, that's the new stop for the bulls, which is not so far away. We've triggered buys above that bar, so it looks like we're just going to continue up in a bull channel. There's nothing to sell on this time frame, and we just tested a breakout point from this bull bar. So the expectation is we're always in long, expecting sideways to up and for reversals to fail. This was a very tight trading range. It might be that bears are going to consider this as a final flag. So we've got leg one, pause, leg two legs sideways in a final flag. This will be leg three. We're going to come back into this area. But I suspect anyone who's buying here is more than happy to be buying lower and near the moving average, betting we're not going to close this gap on the first attempt. So that was the DAX on the monthly chart. Okay, what about the weekly chart? Well, you can see I've got 19,000 here. We tested it a couple of times. We broke out, came back to test 19,000. So the next target is 20,000. Do we have to go up there straight away? No, look at how much sideways price action happened before 19,000. The market took a fair bit of time deciding that 19,000 was a good price, and it might need to do the same to go up to 20,000. For the bulls, they see a strong breakout and follow through above these swing points. 4 consecutive bull bars. We said high probability of a second leg up. This was a cracking trade on the weekly chart. You can either buy the close, buy a tick above, wait for a follow-through bar, buy the close of that. Now you've got a strong breakout bar closing on its high. Traders can either buy a tick above that, which did not get filled on this chart, but I thought the second best buy was this one here. So I added to my position on the pullback here because I like trading breakout pullbacks. Now, had I bought here, bought more there, and big reversal, well, I'm pretty comfortable I'll be able to get out break even because my average price is at the moving average. And that's a great strategy if you get an opportunity to take entries where you're protected by the moving average. What do the bears see? Well, the bears might see 1, pause, 2, pause, 3, or spike, went below the low, that's 1, went up. We just went below the low of that bar there. So technically that's the end of the second leg. This is the bear inside bar. Sorry, it's not a bear inside bar. It did not trigger any buys above there. So at the moment, I think the most important price is above this bar here, which is the high one buy, and we're testing the entry. I think bears are going to need to get below that high one to convince bulls to stop buying high, but then this is going to come back and let everyone out, so go up for a third leg. Can you sell below this bar saying, oh, I think it's a trading range and it's a second entry short? I wouldn't sell below that bar because we've got a lot of open gaps. So the problem will be I'll sell below there with a stop. It's a low probability trade, and there's a good chance I will miss my target. I think if you wanted to scalp back to 19,000, you'd need to find a signal bar perhaps on the daily chart or a different time frame. So always in long, expecting sideways to up, probably going to oscillate between 19,000 and 20,000. Buyers below moving average and below these bull bars. The other reason I'm not looking to sell below this bear bar is because this bear bar had a big tail. So when you're looking at reversals, you wait for a strong reversal, pullback, and then you take second attempts at that reversal. And that was DAX on the weekly chart. So on the DAX daily, I've said stronger pullbacks, bull channel, more sideways. Well, it's a bull channel. We're sloping up with a trend line. We're above both moving averages. Everyone can see that. If I draw a line across the tops of this channel as well, we're not really strongly breaking out climactically. We're kind of just hovering between these two lines, just squeezing price together. I said at the time, this pullback was strong, traders will sell above. They did for a scalp, but they've got out. I said before as well, this pullback was strong. They'll sell above for a scalp, and that scalp has been successful. Now, my problem with this pullback, at least for the bulls, is 3 consecutive bull bars, and now they had a good sell. We had a similar sell on FTSE. I didn't take this one on DAX. I was long on the intraday, so I wasn't looking to sell to get short on there. I was looking to take profits. You can see we're still hovering above the moving average, but 3 bear bars down. They're probably expecting a second leg sideways to down. This is a strong bull spike, so bulls are buying below bull bars as well. They're buying below the moving average, betting that this is going to turn into a trading range and not just suddenly roll over and go to 19,000. This is a bear inside bar. I think it's a bad short at the moving average. I would prefer this to trigger on Monday, go sideways, and then buy for a scalp above it, testing the high of that range. But if you look at the second legs that happened so far on the chart, they all had at least one bear bar. So there's a high chance, I think, of Monday being a bear bar, at least to play out similarly here, setting up a high 2, triggering the high 2, and then we're going to see early next week whether there are more traders buying the high 2 or fading the high 2. And that's going to give us a really good indication, I think, into the back end of next week of how to trade it. Well, if you enjoyed my other videos, I talk a lot about spikes, breakouts, and pullbacks. You can see here, strong bull spike on the way up. Here's a pullback. Where's a buy signal that triggered? None of those did. That's the first one that triggered. That's the second one that triggered, setting targets much higher. Maybe the stop was down here. That was the buy the close. And you can see on my higher time frame charts I covered before, I actually have targets sitting a little bit above where we are. That's why I'm more interested on the scalp to the long side than the short side. You can also see this as the bull spike. You're waiting for a pullback and a buy signal. There's a buy signal there. It was difficult to buy above that signal. Looks like a lot of traders also waited for new spike, pullback, high 1 here, high 2 there. And you can see these just keep working in a bull channel, and they're going to keep going. Traders are going to keep doing that until it collapses back into a trading range. So the decision at the moment if I zoom in a bit, if that is the higher low and we just broke it, there are some bears trying to sell here, betting we're going to get all the way back down to the low of that trading range. If this doesn't work, they'll scale out and switch to becoming bulls. They really want a bar that goes down back to allow more traders to sell. Well, thanks very much for watching. I hope you found that valuable. I've got loads of other drills that all use the Al Brooks price action method and how you can practice it to turn your knowledge from the trading course into really practical skills that are going to benefit you in the live market. But thanks very much for watching. That was the weekend market update for DAX. If you're in the Brooks live trading room, I'll see you during the week. If not, I'll catch you next weekend. Thanks very much for watching. My name's Tim Fairweather from Zen Trading Tech.